Good day. Ira Epstein of Linn Associates with your metal market wrap-up for this Tuesday, November 16th, 2021, just after 6:30 p.m. Central Time. Now, before I get too far, I'm going to be holding the live webinar this coming Thursday, the 18th of November at 12:30 p.m. Central Time. If you haven't received an invite, it means you're not on my mailing list. You can get around that. You can just come up here, click at the top of the page. When you do so, if you're watching it off YouTube, and that's where you'll be seeing these, all you need to do is what? Click on the icon, fill out the form. It'll send you your user ID and password. If you have SPDR, ETF, or stock questions, write them to me. The futures you can let me know as we go on through the webinar. It's a 20-minute webinar, starts promptly at 12:30, ends right on the button typically at 12:50 p.m. I do not post these. So the reason for that, I want you to attend them. That's where you get to ask the questions. All right. So the dollar's been super strong, as you can see, pushing here the 96 level. That's one of the highest levels we've seen in recent times. It weighed on the gold, but didn't crash it. That's very important, at least it is from my perspective. We saw the silver buckle a bit. We saw the copper, platinum markets. They all did that in part because of that. But we're also getting to a stretched out point in the dollar where it's up to the upper Bollinger Band, and the corrections that came in the metals, all of them you're going to see in a minute, right at key resistance levels. Stock market's still acting pretty good. I know the naysayers don't think we'll get a Santa Claus rally. Ho, ho, ho. We'll get one. When you look at the energy markets backing off, and I can see nat gas backing off here, you do realize it was just in the 480 level. So it has rallied up 45 cents, rather dramatic price. And notice it's time to move over to the January contracts. Now, when we look at gold, we can see on a weekly chart of just closing prices, this is a pretty strong action. Yes, we're down $13 for the week as of now, when live trading on Wednesday. And that's what this is. This is Wednesday trade, but you're not even down a percentage point. You had a big reversal day in the market. So as you can see, an outside day down, unless that's taken out on Wednesday or actually on Thursday or, no, I'm going to go back to that, Wednesday or Thursday. The odds favor it's going to become a trade top. And as such, that'll be one of your key resistance points. Support in the market is all the way back at the 18-day average, the 200 and the 100. And what did I tell you? I said it's going to take a while here, a few more days, but I think you're going to get the 100-day average to crisscross over the 200. Now, that's a very bullish setup because that gives you then the shortest term average, then the 100-day, the 200. So they're set up properly. Getting through those will be difficulty. Where's the resistance? It's right here. The market has been riding the upper Bollinger Band. It's only a question of time when it falls away from it. Not will it. It's only a question of time when. Was today the day? It's possible. We'll see if it gets any follow-through. Momentum-wise, what you're looking to see is, do you lose the embedded reading? You haven't so far. If you don't lose it, what I think's going on is the pros on a day like today, right now, right here, this is where they're buying. I don't think they bought during the day on Tuesday. Have you taken my enhanced Bollinger Band course? If you have, look at the pattern, you get it. For the rest of you that don't understand what I'm saying, at the end of this, I'll put up the ad again for the enhanced course. It's inexpensive, certainly something you should be thinking about for yourself. In the gold-silver ratio, okay, the market's continuing to stay under the 18-day average of closes. That's overall still friendly for the silver market. Where did silver fail? Come on. You're up here at the 200-day average of closes with the upper Bollinger Band. That combination's generally pretty lethal if you've been rallying into it in the sense it's going to fail against it on the first challenges. And that's what I think's going on. Again, today, you don't have number one an embedded reading. You're just overbought into that number. Take the enhanced Bollinger Band course. It will teach you what to do with that setup. In the copper market, you couldn't make it up to the upper Bollinger Band. I have my doubts about it making it to the lower one. It could, but I have my doubts. Why? Because so far, the 100-day average in green is doing a heck of a job of holding this market. Now, there's been a lot of articles written over the past week that this area up here, the 480, might have been the peak in prices. I'm buying into that. And the reason is what happens when you get high prices is you bring out production. If you can produce the good, if you can produce it, I wish semiconductors would work that way, but if you can produce the good, then what happens is more of it comes. Well, copper supplies are picking up. We've already given some raises in Peru and Chile to the workers. They'll produce more at this point. Yes, I realize that we're all talking, we're going to hopefully come out of COVID, but it isn't going to be right now. Right now, COVID's going to get worse around the world. Why? In the G7 countries, most of us are in cool climates. We're entering winter. Look at the number of cases going up. Look at Germany setting records now for deaths in a single day. Austria, they're now telling the people, if you're not vaccinated, you're not getting in the restaurant, so on. The other people can go, you can't. That could spread in other parts of the world because this is going to get worse before it gets better. Now, the good thing is, in heavily vaccinated countries like the United States, people do get, and the numbers go up of the COVID, but not the death numbers in the vaccinated areas. The unvaccinated areas, by choice, in the U.S. and other areas where they could be vaccinated, and those people don't, that's where the death toll, at least from everything I'm reading, that's where it's going up. You can argue it till you're blue in the face. The numbers are the numbers. In the platinum, no surprise, just like we were talking in gold in the other market, it had been running against the upper Bollinger Band, coming down. Unlike gold, this market was not embedded. It was overbought, so you can get more of a correction easily to the 18-day average of closes, where I would think the market tries to get its footing. And the strongest market has been the Palladium, but I didn't like what I heard today. In Belvidere, Illinois, we have 400 workers there that make Jeep Cherokees, and they were all laid off today due to, again, chip shortages, not COVID, chip shortages. Tomorrow, the TV will be full of General Motors' new plant where they're going to build electric cars. It's all wonderful. What do you do for the chips? So we've got to get through all that, and that's going to be the important thing. But what do you use palladium for? Catalytic converters. In the dollar, still up and away against everything, and believe it or not, it's trying to embed. So day one of embedding. Yesterday was the other day. The day before, Friday not. Tomorrow's D-Day. Does it embed or not? If it embeds, I know you think this is strong, it's going to get then potentially higher until you lose the embedded reading. Again, the enhanced Bollinger Band course, you want to study that. Okay, how do you do that? Well, just stay on, look at it right now. Welcome, I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.